Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of December the 3rd, 2018. Now, to get started this week, again, the dollar is front and center. Now, the Federal Reserve, much like what I've been talking about in the VantagePoint Live training room and here on our YouTube channel, is that it was, in my respectful opinion, the Fed has got a little bit ahead of itself with these rate hikes, and that no matter come hell or high water, the fact remains is they're going to raise rates. Well, they've backed off that stance, and to some degree, I would say that Chairman Powell has blinked here, and the market is waiting for that. So that's what's given a boost to stocks this week, and I'm not sure that it's enough of a boost to keep those stocks moving higher or to weaken the dollar. So let's get into this a little deeper. When we look at our key pivot areas, 96.72, our T-cross long, as long as we're above that area, it's still pointing towards some dollar strength. Now remember, Friday is a very thin, illiquid trading day. So usually whatever happens on Friday and Monday, the exact opposite happens on the Tuesday, Wednesday, Thursday of the following week. So the dollar's rallied, but as you can see, we have this massive verified resistance zone that simply the market cannot penetrate through to get to this 98 level. In my respectful opinion, very little has changed here. If anything, Powell is pointing towards a dovish hike in December. So the main event risk that we've got to deal with front and center this week is, of course, the non-farm payroll numbers. If that number comes in a little bit soft and we see some of the previous numbers revised lower, that is absolutely going to be a dollar killer, because the rate hikes going into 2019 could be off the table. Not saying they are. We have to look at continuing data, but that's the key thing we want to look at. So for now, when we look at Friday, we've got our predicted moving average. Now the blue line, again, taking the correlation of some 31 other markets when it's forecasting this primary pivot, support, or resistance area. So we've managed to close above this blue line, the VantagePoint predicted moving average, but only for one day. And what I will point out here, guys, is that on Wednesday, after that announcement, after the Fed minutes, you can see the dollar did not make any further gains, as suggested in last week's outlook, that the dollar strength would likely be very limited. Now, if the Fed had said something different, that everything is, we're not even close to neutral on rates, then the dollar would go screaming higher. But the Fed didn't say that. They've basically said they're approaching neutral, and that's very dovish tone to some, or at least that's the way currently the market's interpreting it. So, not surprisingly, gold got a very nice bounce here. The question is whether it can continue higher. In my respectful opinion, gold is likely to have a decent year in 2019, and we should be looking at longs here. Now, right now, we are trapped in this verified support resistance zone. We need to break through to get gold moving. That may not be next week or the week after, but it's coming here, I think, guys. As the Fed funds rates move towards neutral, the hikes are off the table. A lot of other factors going on here, right? But the key thing to understand is that right now, gold's been under pressure because of the stronger dollar. So if the dollar weakens, what will be natural is for gold to start advancing. Now, once again, when we look at our critical pivot area here, using our long-term crossover, removing the black line and using the blue line only, we've closed bearish, but only for the one day. That's in most cases, that's profit taking on Friday. We should be looking to repurchase gold next week if we can get down towards this lower end of the zone between 1200 and 1216. I think that would be a decent area to start going after this again. Now, the indicators are not overly positive on gold right now, but I believe that this trade is in progress to some degree. Now, as we look at we'll look at oil first. Right now, what I'm seeing on the charts here is basically we're running out of sellers on oil. That doesn't mean that oil can't go lower here, guys. However, you've got multiple bottoms forming down here. When we take this and the key vantage point pivot area 55.78, I believe that that will get retested soon. As you can see, as this support builds and this blue line, the market is now banging into this blue line just about every day. So if we can break free and clear of the 52 level, we should be able to start targeting the upper part of this zone. And again, with the Fed backing off the hikes, that may or may not help oil. It's a question of equities, but right now there looks like we could see a short squeeze, a potential short squeeze, I should say, next week, which would indirectly mean we would be looking for longs on oil, but we must break free and clear of 51.86, get above it, stay above it, so we can then, our initial target on oil would then be up at, potentially we would be back up moving towards the 58 mark. Now that'd be a very, very good trade if we can get that, but once again, be careful with this one. It is still very bearish. Stocks next week have recovered on the Fed, not surprisingly there, but what I will point out here, guys, and what we discussed in the live training, VantagePoint's live training room last week, we had this signal with the medium term crossing the long predicted difference, and it was well ahead of this market turning. When we're using the AI to scan through 31 other markets, the AI system can pick up on these things, and it found it right there. And it was a very, very nice trade on the S&P, coming off the 2630 area and up to where we're currently at now. So I would say we are likely to advance towards the top part of this initial zone, which would be 2817. But let's be honest here, guys. We're not really making any new highs in the S&P lately, and it still has a bearish tone to it. We can't always rely on the Fed to determine our stock trades. So right now, it looks like we're advancing forward on this to the upside. Again, when we bring in our blue line only, that key pivot area starting the week will be 27.18. We've closed at 27.58, but like a moth to a flame, very often the market comes back to this blue line. The further it moves away, the market moves away from 27.18, the more likely it's going to retrace to it. And again, this has nothing to do with Fibonacci or Elliott wave or these things, all these conventional lagging indicators. This is science, guys. 31 other markets when we're looking at that. So keep an eye on that level to begin the week. We do have the G20 this weekend, and I'm sure something is going to come out of that that's going to cause at least short-term volatility. Now, as we go into our main Forex pairs next week, the key thing to understand here, guys, is that the market is only trending 20% of the time. Euro-US is in a very well-defined range here, and it's just wandering back and forth, unfortunately, between the approximately 114.80 and the lower end of this zone, currently down at around the 112 area. So we've closed out the day. We've got a little bit of profit taking on Friday. I would anticipate the euro would fare pretty well next week. It should, depending what comes out of the G20 this weekend. But once again, guys, we're in a range, so continue to play the range. And remember, more often than not, Monday is not usually an accurate direction of price for the remainder of the week. So let things kind of shake out a little bit there, but any move lower in the euro right now, longs are still the favored position here. Now, as we come into the US Swiss franc, its counterpart, heavy support is building down here. Absolutely, this is coming in at about the 99.08 area, but we've got massive, absolutely massive resistance here, guys, up to about 102. Shorts are still heavily favored. If stocks rally, that could help this pair push higher, but ultimately the stocks are likely to turn lower before the, particularly into the first quarter of next year. So, the dollar has come through a number of different rate hikes, and this pair struggles to stay above parity. So, the long-term depreciation of the dollar here is evident when you look at it from that perspective. But right now we can see here, if we bring up our critical pivot area, once again we're closing above that key area, but on a Friday, 99.53. If 99.53 holds next week at the beginning of the week, then short-term longs are reasonable. But again, it would be a very short-term long in my respectful opinion. Now, when we come into some of our other main pairs here, again, the pound dollar has very, very critical support, and this support comes all the way down, into the 126.50 area, actually significant resistance or support, excuse me. And this is the area that I'll bring everybody's attention to right here, 126.65. This area has basically held for the last 4 months. We have been unable to break through this level. So I agree that the British pound remains currently somewhat bearish, but it's all headline driven. Brexit gets settled, the pound dollar is likely to go screaming higher in the first quarter, if not sooner. This area at 126.64 is absolutely massive support. And again, we haven't been down here for a couple of days, guys. We've been down here before, and this area is held for the last 4 months. So once again, short term we could see further downside with the Brexit headlines, but ultimately this pair is likely to go higher. The indicators from VantagePoint are still predominantly negative here, but again, we've had some decent moves also to the upside. So when we look at this and we bring in our blue line by itself, we've had a couple of good moves, but once again, the market cannot get over that long predicted. So next week, 120 to start the week, 127.87. We've closed below that area again, so the initial move will likely be down, but watch for a buying opportunity in that 126.60 area. Now with dollar yen again up against very formidable resistance in this one, anywhere above, basically anywhere above 114.40, 114.30. We've had multiple failures. So if you can see here, if this is a set of steps, it's a very slow moving train, but the steps are definitely moving down. Now a spike in the equities, that could help dollar yen, even if the dollar is weak across the board. If equities spike, the yen and the Swiss franc will also be weak. So we could still have a long trade here. Again, that key T-cross long, 113.38. We're closing just barely above it at 113.56. But as I've discussed in VantagePoint's live training room, that the yearly opening price here comes in about 112.68. And we are positive on the year still. So there's a very, very slight upside bias. But I think that ultimately the dollar yen goes lower. But again, when we're looking at that critical level here, 113.54, we're closing below that again 2 days in a row. This tells me that the likely initial move to begin the week is probably going to be down. But again, we've got the non-farm payroll this week, guys. Very, very choppy week. In most cases, the dollar-yen pair is positive up until the announcement, and then it sells off regardless of the number. So I would expect the same situation this time. Now, as we come into our 3 main commodity currencies, starting with the USCAD, we've enjoyed some very, very good longs and shorts on this pair. But the bottom line here, guys, is that basically just below the 134 level on this is absolutely massive resistance that has been repeatedly tested. You can see it here. And we've got additional resistance all the way up to about the 134.90 area. So in short, longs have worked, but shorts have also worked at this area. If the short squeeze that I discussed just a few moments ago happens and oil spikes higher, that will be the catalyst that sends US-Canada lower yet again. There is a better than 50% probability that is going to happen. So Keep that in mind. If we are going to short this thing, we want our stops above 134.20. Again, you can see the indicator right here, the medium term crossing the long predicted difference to the downside. The neural index is not in agreement. But what I really like about using a divergence indicator like the predicted differences here to gauge two trends against each other, as the market's moving higher, the medium term predicted difference is moving lower. That is a fantastic divergence indicator that is very seldomly wrong. So when the neural index gets on board, I say we get one more spike out of US Canada and we're likely moving lower unless we have a massive sell-off on oil. So keep an eye on that. Once again, we look at our key pivot area. We're just hugging that area very closely. 132.71. We closed 132.85. If we start breaking down again below 132.71, this pair is on the move to the downside, and that will probably indirectly mean that again that oil has advanced higher. Now, Aussie US and New Zealand US, two of the actual strongest currencies in the Forex market in the month of November have been the Aussie and the New Zealand. Very good moves in the month of November. Terrific, actually. But now we're coming up against some resistance. So the Aussie needs a couple of things here. It needs the stocks moving up, and it needs gold moving up. If gold's moving up, the Aussie will likely follow. So right now, you know, we've moved a little bit far away. We're closing out at 73.10. We're about 100 pips above the key VantagePoint pivot area at 72.48. When we check our other pivot area here, we're coming in at about 72.85. That's the area we've got to watch. But again, formidable resistance up here. So be very cautious. Very cautious. And New Zealand, I'm going to advise the same thing. It basically is the same trade, but you can see that we're up 3 days in a row. We're banging up against this resistance right here. And that resistance comes in at 68.86. We're closing 68.67. So if we can break through this area, we could be looking on Aussie and New Zealand. We could be looking at flat out trend reversals if we can start pushing higher. But again, we need those stocks moving up to help help out all three commodity currencies: the Aussie, the New Zealand, and the CAD. So with that said, this is the Forex Weekly Outlook for the week of December the 3rd, 2018.